Look, we keep talking about it, this disconnect between the market and the investing community, though maybe the disconnect is coming back a little bit closer, and what the economists in the universe seem to be thinking about what the Fed may or may not do, and why there was such a disparity. But I don't know, maybe you think with the market coming down, people are starting to get with reality here.
Andrew, there's a number of disconnects. There is the one between the markets and the economists, but there's also the one, more importantly, between the markets and the Fed. And this week is a critical one because Chair Powell has two choices, either to let that disconnect continue or try to resolve it. And if he tries to resolve it, he either resets the market's expectations or he acknowledges that the market is right because we're going to have a significant economic slowdown. It's going to be up to him. Important that he does not do is repeat the experience of last year, where he makes all sorts of economic forecasts that prove to be wrong.
Okay, so I'll give you another disconnect that I don't understand. If you look at what a lot of the bank CEOs are saying publicly, and I'm talking about the Jamie Dimon and others of the world, who have put the chance of a recession at close to 90% in some conversations, and then you look at what the bank's economists are saying, it's like night and day. I think J.P. Morgan, it's 40%, for example, in terms of the prediction of a potential recession. Why is there such a disparity there, you think?
I think part of the issue that everybody's trying to struggle with is what do you do when the U.S. is outperforming the rest of the world? I think if it was just about the rest of the world, the recession calls would be all over the place. Europe is looking terrible, and the further hike in gas prices is not going to help much. China is clearly struggling. It is the U.S. that has the potential to avoid a significant downturn if we get the policy right. So you get this incredible disjointed messages from within the same institutions because they have different views about the U.S.
In terms of what your view is at this point, you think that Jay Powell is going to actually say what? I know what you want him to say, but what do you think he's going to say?
I don't know. I really don't know. It's like the neutral comment he made a few weeks ago. He wants to tell the markets what they want to hear, but increasingly he's being criticized for not being realistic. So I don't know where he's going to end up. Like you say, I know what he should say is he should be honest about what's ahead. I think that's going to be helpful for the markets. It's also going to be helpful.
But Mohamed, what is honest? Because there are some people who think he needs to be at 75 basis points and say, I'm going to stay there, and I may stay there for months, effectively. Some people think you should go to 100 basis points. And then there's others who say, well, actually, you know what? Maybe the economy is doing a little bit better than we thought. Maybe it's a softer landing. Maybe we should be a little more. Maybe 50 basis points is reasonable, right? I mean, I'm not saying it is. I'm just saying that's and maybe it's 50 basis points, maybe 1 month, 2 months, and then we're done. I don't know.
So first of all, he should shy away from what I call spurious precision. Okay, I think forward guidance has really been discredited under this Fed. What he should come out and say is, I'm going to do everything I can to put the inflation genie back into the bottle. That is critical for our longer-term economic well-being. And yes, that may result in a much weaker economy, but over the long term, that's what we need. This other fairy tale economics isn't helping anybody.